traders, thank you for joining our live session today. I'm Rehana Haidari, Senior Account Manager at IronFX, and I will be hosting today's live session. We will start with fundamental discussion with our Senior Research Analyst, Peter Yusuf, and then Antonius Hamdan, Head of Retention, will be going over some of the best trading tips. This will be followed by technical analysis by Peter, closing with a navigation through the Partners Program on the website by Emily Kotsuni. Hello, Peter. So tell us what's driving the market today.
Hello, nice to be here. Well, there seems to be, as the week begins, a more positive market sentiment in the markets. I would dare to say that it's interesting how over the weekend we had a number of analysts which started citing that the nature of inflation, especially in the US economy, may be temporary, and that would be a switch. If that's being confirmed or more analysts come forward stating such claims, we may see the market sentiment changing and practically becoming more risk on. On the flip side, I would note that we had the development in the war in Ukraine. Putin has warned about the possible imports in Ukraine of long-range missiles, and that tended to escalate the situation even further. So that's something which we would be keeping in mind over the following couple of days.
Very good. And what is expected to be the highlight for today?
The highlight for today, it's actually not today, it's during tomorrow's Asian session. We get RBA's interest rate decision. The bank is expected to hike rates. There is the basis which we have an expectation of a 25 basis points rate hike, but there are also market participants which tend to expect a stronger rate hike, maybe even of a 40 basis points rate hike, which would raise interest rates of the Australian bank from 0.35 to 0.75. In our opinion, for the Aussie to get some substantial support from RBA's interest rate decision tomorrow, we have practically three possible scenarios. The first would be that the bank actually delivers a 40 basis points rate hike. That could take some or part of the market by surprise and thus provide substantial support for the Aussie. The second would be practically for the bank to hike rates by 25 basis points, but have a very, very hawkish forward guidance in Governor Lowe's accompanying statement. Nevertheless, that could also leave Aussie traders uninterested and practically reduce volatility. The third scenario would be a combination of the previous two, which would bring out the strongest reaction in favor of the Aussie, and that would combine practically a 40 basis points rate hike in combination with a strong hawkish forward guidance. That would be the main issue for the day, given also that today we have a low number of high impact financial releases, and we expect fundamentals to lead the markets today until tomorrow.
Did the USD draw some support from the US employment report for May on Friday?
Yeah, it actually did not much, just a bit. We have to note that the NFP figure dropped, but not as much as the market expected, which practically is a plus for the US dollar. On the other hand, we have to note that the unemployment rate failed to tick down as was expected, remained at the same levels at 3.6%, while average earnings slowed down somewhat. So overall, average earnings are still at high levels and seem to be continuing to feed inflationary pressures within the US economy. The employment market in the US seems to remain rather tight. So we may say that the release allowed the Fed to continue on its rate hiking path of 50 basis points, with the next test being the inflation rates of May. That would be on Friday.
How about US stock market?
US stock markets dropped a bit. That was on Friday because there was still some cautiousness in the market sentiment. The US employment report was once again implying that the US employment market is tight. All of that tended to drive US stock markets lower. We had also the warning from Tesla that they were going to be cutting off 10% of the jobs. That didn't bode well with the investors. But during today's Asian session, we seem to have a reversal. Asian markets had an improved performance when the greens. We have to note that maybe the fact that Beijing is loosening its COVID restriction rules somewhat tended to boost confidence of investors. European stock markets followed in a positive sentiment. However, I would like to see how the American session starts in order to draw some better conclusions about stock markets and the market sentiment in general.
How did gold react to USD's strengthening?
Well, gold has a negative correlation with the US dollar as gold prices are denominated in USDs. And the strengthening, even slight strengthening of the US dollar on Friday tended to weigh on gold's price. While today we see that there is a slight weakening of the US dollar, and that tends to provide some support for gold prices. I would dare to say, though, that overall the negative correlation of the US dollar to gold may continue, and we may see practically the two trading instruments switching places, i.e. whenever the US dollar is strengthening, gold price goes down, and vice versa.
What about the oil market? Are there any news?
Yeah, the oil market, we had Saudi Arabia, which increased the prices for exports to Asia. Now, the increase as such could provide some support for oil prices, but overall, that's indicative of the situation in the oil market. So for the Saudis to be confident enough to actually raise prices, that means that they are also quite confident that the market is tight, demand is still high, supply is rather low. So overall, we may see oil prices getting some support in the next couple of hours, within days.
Across the Atlantic, how is the pound behaving?
Pound traders are a little bit troubled. We had a pound which practically on Friday weakened against the euro, the USD, and JPY. The JPY to less extent, but still. There is quite some uncertainty, especially in the UK political scene. It seems that Boris Johnson will be facing a rebellion within his own party, maybe as early as this week. And that could create some uncertainty in the UK political scene. We still see the possibility of the UK government actually resigning as being remote, but the stakes are high. So traders should keep the issue under a close eye. Today we would be highlighting the speech of UK's ex-chancellor, which will be talking in the late European session, Mr. Rishi Sunak. We may see some comments about taxation coming up, and that would be also a big issue for pound traders. Overall, on a fundamental level, we still would like to highlight that the economic outlook of the UK remains rather dark. And it's characteristic that the UK economy actually shrunk just a bit in March, but still it shrunk. And worries about stagflation, which would imply practically low GDP growth rates and at the same time high inflation, seem to be present in the market. And there are extensive worries about the outlook of the UK economy, which could actually weigh on the pound. The pound, it should be noted that today in the early European session, got some support against the US dollar at least, which was weakening anyway, but it's still quite uncertain of what's going to be happening in the next couple of days.
Let's move to the other side of the channel. What's the euro doing?
Well, the euro traders are focusing now on ECB's interest rate decision. That's on Thursday, and whether the bank is going to be actually signaling a hiking and a tightening of its monetary policy. I would dare to say, though, that the war in Ukraine still has an adverse effect on the European economy, especially given the high level of oil prices and natural gas prices, and that could continue to adversely affect the recovery of the euro economy. We tend to maintain a cautious but nevertheless optimistic outlook for the common currency, and we also would like to focus practically on ECB's interest rate decision on Thursday. On the political front, we would note that Europe's unity seems to be in danger, given also that Hungary seems to be splitting apart regarding the sanctions on Russia about importing oil, and was allowed to continue to import oil.
Thank you so much, Peter.
Hello, everybody. Welcome back to another episode with myself. My name is Antonio, and today we will be talking about stock splits and how you can actually take advantage of such an opportunity in real time. All right, so today we will be talking about Amazon. I'm sure everybody knows Amazon. Everybody has ordered something off of Amazon, and maybe some of you are still waiting on something. Maybe it's not their fault, maybe it's logistics. Maybe it is their fault that they're taking a bit longer than usual. All of these things play an effect into the stock price of a certain asset. Obviously, we're talking about Amazon today, and we'll be exploring why they split their stock and what that means. Okay. Firstly, though, let's talk, give a little bit overview in general about Amazon, just in case, just to be on the safe side, as it were. So, of course, Amazon is a company that provides a range of products and services to customers. Products offered through its stores include merchandise and content that is purchased for resale, and products offered by third-party sellers. Amazon also manufactures and sells electronic devices, including the Kindle, Fire Tablet, Fire TV, Echo, and Ring. It develops also and produces media content. Now, this operates through three different segments: North America, International, and Amazon Web Services, most commonly known as AWS. The AWS part of it, the segment as it were, it consists of global sales, compute, storage, database, and other services, which is usually for more like startups, enterprises, government agencies, and academic institutions. It does provide advertising services as well to sellers, vendors, publishers, authors, amongst others as well, through programs such as sponsored advertisements, display, and video advertising. It serves consumers, as it were, through its online and physical stores. Customers access its offerings through websites, mobile application, through Alexa, various devices, through streaming, and of course, physically visiting its stores. Okay, so that's a general overview of what Amazon offers. So it's not just an online store that might sell something random or absolutely everything. There's a lot of other investments that the company makes, such as the Ring doorbell, such as Echo TV, and of course, Amazon Prime, which is their own streaming service. They're producing their own movies, their own series. One of the biggest series that is expected to begin, I'm not sure if it's this year or in 2023, is a prequel to The Lord of the Rings. I think it's called The Rings of Power. That series alone cost Amazon $1 billion to make. So obviously it is expected to be something very, very big, something very grand. And if they're giving that kind of money into their series, then that probably goes to say that their business model is doing quite well. Speaking of their business model, let's give a little financial summary for the first financial quarter of 2022. Before we talk about that, just a reminder of a little something that I mentioned last time in the previous episode in regards to earnings reports. At the end of each financial quarter, all public companies are obliged by law to release reports, what they expected to make and what they actually did make in regards to earnings per share as it pertains to that aspect of their business. Okay, that's of course becomes public information, and that is where a brilliant opportunity, at least 4 times a year, to as safely as possible trade on an opportunity. All right. So for the past 3 months, the first 3 months ending 31st of March of this year, of 2022, Amazon had its revenues increased by 7% to a total of $116.44 billion. Yes, billion with a B. Crazy numbers, I know, but yeah, that's what they're worth and that's what they've made. Now, having said that, their net loss has also totaled 3.84 billion. Now, out of the total income of 8.11 billion. How do they lose? Sometimes sellers don't really send what they need to send. Sometimes they don't ship out correct at the correct times. Things get lost. There are accidents that happen, whether it's the drivers, whether it's the ships at sea. There are things that cannot be predicted. As a result, you do have losses as well, like in any business, right? It's the way that it is. You got to balance out your sheets. Now, if we have a look at the revenues that reflect Amazon Web Services, the AWS as we called it, that part of it, that increased by 37% to a total of 18.44 billion. Obviously, COVID did help usher in AWS as it pertains to, a lot of people looking for new web services and how to get them. What is the best SEO that I could offer? What is the best exposure for my company? What media can I use? What advertisements would be best suited to my brand or to my business, as it were? That's what a lot of business owners think. How can they maximize not only their exposure, but ultimately their business as well? So obviously, Amazon is doing quite well in that if they've made such a return. Now, the third-party seller services segment that Amazon does also offer increased 7% to a total of 25.34 billion. Subscription services, which is basically like Amazon Prime that I just mentioned, amongst as Amazon Plus, or when you sign up to buy something of Amazon, you also have, I think it's Prime also, but it's also Prime for ordering and Prime for, of course, the video streaming services. That has had an increase again, as we said, 37%, and the North America segment 8% to 69.24 billion. So it's safe to surmise that Amazon has been doing very, very well over the last few years, and it doesn't show signs of stopping. The way that they've set up their infrastructure and what they've done with splitting their stock. Now, what is a stock split and why do companies split their stock? In very simple terms, it's in order to make their stock price cheaper for more investors to join in. They want to sell more of their shares. They do make more revenue by doing that. And plus also a company that gets overvalued kind of has a ceiling. So by splitting their stock, they make their stock much cheaper in order for it to have a much more longer period of growth moving forward. Doesn't always happen, but that's the general idea behind it. Now, once the U.S. market opens today, we will see that Amazon has split their stock 20-1. So from a price of 3,000 almost that it was last week, it closed on Friday at $122 per share. So that means that a lot of average people can now afford to go buy one share of Amazon worth $120 in compared to $3,000 that it was last week. The people who already own shares of Amazon, whether it's physical shares or through CFD trading like we offer here as well, then it gets appropriated. So you still hold the same value and the same amount of shares as you did prior to the stock split. Okay, so even though Amazon has split their stock, they still have a market cap right now of 1.25 trillion. That is the total market cap and value that Amazon holds in the global markets. Now, being a company that it is, obviously it's very, very hard to go back to 2,000-3,000 as it were in regards to their stock price. That is almost impossible for that to happen unless they have the same kind of growth that they had over the last decade, which is kind of impossible because they've already reached kind of their pinnacle of what they're doing. Now it's just about making their services better, whether that's the streaming service, whether that's the web services, whether that's their media, their advertising, and of course, their actual main business, which is of course the selling and purchasing of goods and services, okay, to customers. So having said that, let's give an example of how a client can benefit from this news. Now, obviously, every single day there are different news. There's always something going on around the world. Today, it's Amazon splitting their stock, which Google will also do a month from now. We know that. We're already aware of that. So let this be an example of what to expect with Google, or Alphabet as it's known, the parent company, next month. So the US market is going to open today at 2:30 GMT. As soon as the market opens, we will see that Amazon has a pre-market price that it closed the other day and what it is now. That is expected to be higher than what it is. But a lot of people have going to be able to take positions, want to take positions. A lot of people will want to get out of their positions because they've had either a profit or they've been holding on, and it's a good time for them to get out and reinvest again. There's a lot of different aspects as to what you want to achieve. But this is usually done with having the long term in mind. And what do we mean by that? Obviously, here we trade in CFDs, a contract for difference, like I mentioned last time. So you're not physically going to purchase the share of Amazon, okay? So what you're going to do, a client wants to take a trader who wants to take advantage of the opportunity presented by Amazon today, it's quite simple. Obviously, it all depends on your budget, right? Because we always want to be safe when it comes to trading. We always want to implement a risk management. So you always know where you stand, what you stand to make, what you stand to lose should anything go south, okay? So when the US market opens today, you will have an opportunity to trade on Amazon, to open a position on Amazon. Now, Trading Central and all the market research suggests that after a stock split, it kind of gets a bit volatile and then it starts picking back up again. We saw the same with Tesla, who split their stock last year, and from 300 they went to 1,000 within the span of a year. So Amazon is hoping to follow the same route, the same path, which more often than not, it does happen. Now, as I said before, it's going to be very difficult for Amazon to reach the 2,000-3,000 mark again because they're already established, so they don't have that much room to grow unless they close absolutely everyone else down and they're the only sole providers of goods and services, which of course is not going to happen. So having said that, if we have a look at how Tesla is a car company, electric car company. So if they split their stock and from 300, they went up to 1,000 within the space of a year, and all they do is sell cars, electric cars, then it is safe to assume that Amazon will follow a kind of similar successful regrowth rate or path again Maybe not as much as it was, but at least have a very big growth throughout the remainder of this year. Why do we say that? Simply because no one's going to stop ordering stuff off of Amazon. Businesses, not only do they use Amazon to order things from, but as I said, AWS, which is the web services, which is a very, very big and growing aspect of Amazon as a company. Imagine it grew 37%. Why? Because they've got a global reach. They've got a global name and a global brand that everybody knows. So a small business owner will want to use Amazon because they believe that they will help them to get as much exposure as possible to the world in order for their business to grow. So having said that, again, all market research, major analysts, and the technical analysis side of things does suggest that Amazon will follow an uptrend path for the long term. Now, keep in mind, like all assets in the markets, in the financial markets, it never goes up in a straight line, never goes down in a straight line. It fluctuates. Okay, so it goes up, comes down, goes up, comes down. And you can see that on the chart. But over the long term, if you put it on the monthly, for example, your view, you will see that there is a growth, a standard growth. Now, if the market opens today at 122 or 125 or even 130 or even below, $10, $20 does not make that much of a difference if for the long term you're targeting, again, won't be 2,000-3,000, but let's say even 1,000. Let's say that it follows exactly like Tesla did, which is very, very common and very, very logical to assume, being that they're two very, very heavy tech companies. They're in the Nasdaq. We discussed about the Nasdaq last time as well, how it works and why there's always a projected growth, not only on the Nasdaq, but of the companies in the Nasdaq. Okay, so all the companies want to stay there. It does make a difference to them. It is the prestige as well. So let's say a client deposits today 10,000 of whatever currency it is. Let's talk dollars. So a client deposits the $10,000 today, and they want to take advantage of Amazon. Now, if you remember last time, I gave an example of a very common strategy that is used by a lot of professional traders, which is known as the 20-10 rule. So you never expose more than 20% of your account, and you never risk more than 10% of that as your risk exposure. So to put it in mathematics, 10,000 equities available in the account, 20% of that, which is 2,000, is used to trade on Amazon. Now with 2,000, right now as it currently stands, you can purchase, let's say on average, roughly just a ballpark figure, 20 shares. Whereas you could buy not even one last week. Now you're looking to purchase 20 shares of Amazon. Sorry, at 2,000. And you leave that open for a month, 2 months, 3 months. The next earnings date for Amazon is on July 28, 2022. So most clients will look to get out of it right after the next earnings reports of July 29th. So if you enter now, price is, let's say, 120, and you've bought 20 shares. So 20 shares at 120. Should they get to 1,000, then you can do the mathematics. So each share that you have now, which is worth 120, will be worth 1,000. Multiply that by 20, and that is what you have the potential to make. Why? Because the leverage is also 1 to 20 on stocks. So a 10,000 investment with a 2,000 exposure and a 200 risk can yield you potentially much, much higher results a month later when the stock price is expected to rise. Now, if it doesn't rise as much as the 1,000 or as much as that, again, it's for the long term. So the analysis suggests that it will get there at some point. If we knew exactly when, then my name would be God, not Antonio, and I probably wouldn't be here trying to help you guys out as well, right? Unfortunately, trading does have its difficulties because the markets always work in cycles and you never know what could happen. as we're talking right now, maybe a great white shark bites through the internet cables off the coast of South Africa and sends us back to the Stone Ages. You never know, right? Or nuclear warfare, knock on wood, of course, but you never know what could happen in the markets. No one expected Amazon to split, yet they did. Google is also going to split. Why? Again, to make it more affordable and, of course, to give an opportunity for their companies to have another growth as well. It is a business model at the end of the day. So for people who are watching this or are going to watch this, today is a very good opportunity for you to have a look at trading on Amazon and taking advantage of the stock split, which means that you will be getting in at a much, much lower point. And that means your money would be able to work for you much better, as it would have more value. You would hold more shares. The leverage is 1-20. And as a result, for the short term and for the long term, it could potentially be very, very beneficial for you. And if it does get back to the 2,000-3,000 mark, then even better. So if someone who deposits 10,000 a year from now could have 20, 30, 40 in potential profits. The opportunity is there. The opportunity is massive. And I would suggest anyone that can afford to, of course, take advantage of it. If you cannot afford it, then I'm sorry. It just is not the opportunity for you right now. There are other opportunities, as there are every single day. But keep in mind that the biggest focus that we want is to make sure that our clients are trading safely with as less risk as possible, with money that they can afford to invest in. Okay. So having said that, if there are any questions, by all means, please contact our support team, and an account manager will get in touch with you. If you want to know more details about Amazon, if you want to know more details how you can actually enter the trade at the time, when and well, with support and resistance levels, please get in touch with our support department, and an account manager will get in touch with you. Thank you for your time, and see you next time. Bye-bye for now.
So welcome everybody to the technical analysis part of today. Before we make a start, let me switch the chart. USD index for our chart. You can see how the price action actually got some support. That was on Fridays. late European, early American session. This one was at the moment which practically the US employment report for May was released. Not sure for volatility, but still some support for the US dollar. The release was kind of lukewarm. Let's say, for example, the NFP figure dropped, but on a positive note, at least it didn't drop as much as the market expected it to drop. So that was a plus for the US dollar. Also, the unemployment rate failed to actually tick down from 3.6 to 3.5, but still 3.6, that's pretty low for an unemployment rate in the US. So overall, the release practically is another green light for the Fed to actually proceed with its rate hiking path. It implies that the US employment market was still tight in May. And the next big test, in my opinion, that would be the US inflation rates. For me, that's due out on Friday and could once again gain substantial interest among traders. Nevertheless, for the time being, we maintain a bias for a sideways motion of the index. That would be practically between the 102.75 and the 101.30. Note how the price action rose, yet consecutively dropped, and during today's Asian session broke the 102.05, which more or less tended to reaffirm that the price action for the time being is revolving around that level. We tend to maintain our bias for a sideways motion, given also that the RSI indicator has just broken below the reading of 50 and seems to remain near it. Doesn't go too far away. So the bears are still not in the picture. Yeah, that should sum it up. Let's have a look now at, you know something? I was about to show you US stock markets. Before that though, let's have a look what happened with European stock markets and Asian. Let's make a start with Japan. JP 225, 1 hour chart, in a steep upward motion, about to be broken, tested right now actually. Right here. Japan's index is on an upward movement, got some support during today's Asian session. Look at all this upward movement here. That was indicative of JP 225's movement. Probably the easing of lockdown measures in Beijing, in China, may have improved market sentiment somewhat here and had boosted traders' confidence. So they were more on the buy side, a little bit more risk oriented. But overall, we tend to maintain a bias for a bullish outlook as long as the price action remains above the upward trend line. This is the 4 hour chart. Let's put some resistance, some support lines here. This one's going to be pretty close to the price action as a resistance line, as it has actually peaked here. It's a small one, but still seems to be valid. Should not be underestimated. The first support line, I would be placing it here at the low point. In green. Next one would be here. And the next one here. Let's switch to the 4 hour chart. Beautiful touches, especially in the S2. As you have touches on the low side as a support line, and at the same time you have also for the resistance. Let's label them. Now this would be the 27,500. Yeah, 515. Let's be a little bit more exact here. Yep. The second would be at 27,130. Sorry about that. Let me correct that. That's better. The next one would be at 26,725. There we go. Let's find some resistance line here. Oh, definitely one. Being red. $28,640. Sorry, 28,630. Oh, there's another one here. Okay, that's a little bit out of range up there, but could be one here. And the next one's going to be here. And the next one, yeah. This touch here. See, there's another one almost similar at the near level. And that's it. Oh, another support line here. We'll keep that. Delete. Realign. $29,100 is the third resistance line. So that should be it. Now we maintain an upward bias, a bullish outlook if you prefer, for JP 225, as long as the price action remains above the upward trend line. Please note that the RSI indicator is approaching the reading of 70, which on the one hand tends to imply that the bulls, or verify the bulls are present, and there is a bullish sentiment in the market. On the other hand, though, watch out for it. It may also imply that the price action has reached an overbought level. It may be ripe for a correction lower. So as long as the price action follows the upward trend line, we tend to maintain a bullish outlook, and we would expect the price action to actually break the 28,050 and start aiming for 28,630. Should the price action drop and actually break the pre-mentioned upward trend line, we may expect a bias for a sideways motion to surface initially until the index decides on the direction of its next leg. Should the bears actually take over, we may see JP225 breaking the S1 27,515 and start aiming for 27,130. But I think we're still a long way away from that. The initial reaction would be to break the downward trend line if it's broken, clearly broken, and for us to switch our bullish outlook in favor of a bias for sideways motion. Let's have a look also at the Europeans, as Asians have been on the rise. Let's have a look also at Germany. This would be DAX for our chart. Excuse me. Resistance line just above the price action. Actually, where the price action almost is. Yeah. Here, so this could go even a little bit lower. That would be at the 14,620. This is DAX's 4-hour chart. The next resistance line would be placed here. $14,850. It's a nice round level. Let's find another hour. That's too far away. Oh, this is a nice one. This is definitely the one here. This was a price support line. I'm keeping this one. One touch, two touches. This could easily transform to a resistance line as the price action has broken below it. So we're keeping this, and that would be the 15,070. And another one at the R1 at 14,620. Moving lower, and let's have the first support line being placed at 14,350, but in color green. Let's change the color here. There's another support line here. Support, support, resistance, multiple tested. This is good. I'm keeping this one. Bad. I need also another one which will be closer to the price action. And this one is at 13,870. Here, this is a beautiful peak here. Could be placed here, could be another one here. We have multiple touches here, all over the place. $14,125. There you go. You know what? I want another confirmation about the direction, and I'm going to be using the Bollinger Bands. Indicators, trend, Bollinger Bands, that's it. 20 period moving average plus 2 deviations in dark blue, yeah. Okay, that's a nice jump. It's a beautiful jump at the opening. It's being verified. And the SR1 is holding like hell. Definitely a sideways bias. So, what we can see is that despite the opening positive gap for DAX 40, the price is really unable to break above the 14,620. That practically leads us to keep a bias for a sideways motion between the 14,620 and the 14,350. Note that the RSI indicator may imply that there are some bullish tendencies, so that should not take you by surprise. It's also partially due to the opening gap during today's European session. Nevertheless, to switch our bias for sideways movement in favor of a bullish outlook, we would require clear breaking of the 14,620 and for the price action to start aiming for the 14,850. To the downside, and should the bears take over, we would expect the price action to drop considerably, break the 14,350 and start aiming for the 14,125. Practically would require the price action to get out of these boundaries in order to change our bias for sideways movement. It's a beautiful chart, people. Let's have also another look at an American share. Let's see Nasdaq. Okay, that's interesting. So Nasdaq has been moving in a sideways bias, in sideways motion, between the 12,935 and the 12,440 node. How steep the drop was on Friday, while it's been recovering in the pre-market hours. It seems to be a wave of optimism once again, a slight one, but it's still present. We can see that there are similar movements also with Dow Jones. Let's have a look. Yep, here it is. This is Dow Jones for our chart. If you compare it with Nasdaq, it's a very, very similar movement. So practically US stock markets seem to have aligned. Let's also have a look at the third index, which would be the S&P 500. Yep, here it is. They're almost identical. They all maintain a sideways movement. It's a wait and see position, people, since around the 27th, 30th of May. Yeah, 27th of May. Also 27th of May. And and this would be Dow Jones, also 27th of May. So practically the three stock markets have aligned and are in a wait-and-see position for all three of them. We tend to maintain a bias for a sideways movement until one of the upper or lower boundaries is broken. That would force us to switch our bias in favor of a bullish or a bearish outlook, respectively, on the break. Whether the support line has been broken, that would imply an adoption of a bearish outlook, while should the upper boundary be broken, that would imply or suggest the adoption of a bullish outlook. There is, though, some slight bullish tendencies in the RSI indicator, which should be noted. The same applies also from the S&P 500 and Nasdaq, albeit Nasdaq to a less extent. I would like to have a look at an FX pair as well, and that would be AUD-USD. That's the reason why. It is. We adjust this. And this has been now turned to a support line. Actually, this should be deleted. This one as well. And that gives us a beautiful upward trend line. Look at this. That gives you a better perspective of the situation in the FX market regarding the Aussie against the US dollar. But I'm missing a resistance line. Yep, here it is. It's high, I know it. $74.60. In red, please. Let's have a look. Yeah, it has practically the upper boundary here, the past sideways movement. Seems to be valid though. Should be. Okay. Let's have a look. Now the reason, let me readjust the labels as well. And here we'll go with the S2 being the 0.7125. And finally the S3 being placed at 0.7035. Now the pair has been guided by an upward trend line, and that's been going on since the 12th of May. You can see the upward trend line here. It's a beautiful clear upward trend line with consecutive lower trows and consecutive higher trows and consecutive higher peaks. We tend to maintain a bullish outlook for the pair as long as it remains above the upward trend line. On the fundamentals, I would like you to note practically two elements which are affecting the Aussie right now. The first would be the positive market sentiment as we saw it in the US stock markets before, as well as the European and Japanese stock markets earlier, as they are all on the rise, at least since the late Asian and early European session today. Should the market sentiment remain positive, that could provide some support for the Aussie, which as a commodity currency in the FX world is considered to be more risky than other currencies. Also, I would highlight the release of RBA's interest rate decision. The bank is widely expected to hike rates. The market seems to have priced in at least a 25 basis points rate hike, and the bank is expected to raise rates from 0.35 to 0.60. However, a part of the market goes even a little bit further and seems to be pricing in the possibility of the bank performing a 40 basis points rate hike, i.e. raising interest rates from 0.35 to 0.75. Now, should the bank actually perform a 40 basis rate hike and adopt a hawkish accompanying statement and forward guidance and Governor Lowe's statement, we may see the Aussie jumping, breaking the 0.7265 and start aiming for 0.7340. On the other hand, should the bank with its interest rate decision disappoint traders, we may see a reversal. We may see AUD weakening, breaking the AUD-USD, breaking the pre-mentioned upward trend line, breaking the 0.72, and start aiming for 0.7125, which may imply a bearish outlook for the pair. It's actually pretty nice. So that should sum it up from my side. From IronFX, best wishes for solid trading. Stay tuned.
Hello everyone, my name is Emily and welcome to another short walkthrough of our website. Today I'll be showing you a little bit about our partnership programs. So let's get started. As you can see here, this is our home page and I want us to go right here where it says partners. So last time I said that it's extremely important for us to build a long-term business relationship with our clients. So this is a great way of us doing this with you. So let's get started with the introducing brokers, also known as IBs. So let's go down and see what are introducing brokers. So let's read it together. Introducing brokers, or IBs in short, are independent broker-dealers acting as agents whose task is to introduce new traders to a brokerage firm such as IronFX. Introducing brokers earn commissions calculated from the traded volume of the traders they introduce to the brokerage firm. It's in the best interest of the introducing brokers for their clients' trades to be profitable because the more they trade, the more revenue is generated for the IB. Then we move on to revenue and market rebates. To make their offerings more alluring, IBs often give market rebates to their clients, usually by sharing a percentage of their generated revenue with them.
Market rebates are perhaps the main reason why some traders prefer to trade with a brokerage firm through an introducing broker. Moving on, we have the IB monthly reward plan. So you have different options right here. We have silver, gold, platinum, and diamond. Let's get started with the silver. We have the ranking, and then you go to qualifying net deposits, minimum trading volume, number of new clients, and cash reward. So for silver, qualifying net deposits, $5,000, minimum trade volume, 50 lots, number of new clients, 3 to 7, and cash reward, $100. Moving to gold, it's $10,000, 150 lots, 8 to 15 new clients, and $250 cash reward. Moving to platinum, we have the $25,000, 250 lots, 16 to 25 new clients, and $500 cash reward. Then the last option is diamond. And then we have $50,000, 400 lots, 25 plus new clients, and $1,000 cash rewards. Then all you have to do is first visit our marketing hub to get your unique referral link. Get new clients to sign up via your referral link. The more referrals trade, the greater your chances of earning rewards. So what I want you guys to do if you decide to proceed with our IB program, if you don't have any experience, it's completely fine because, as I said, you have the dedicated account managers who are here to help you. And also you have our support team that you can always ask any questions you want, and they will be able to assist you throughout the whole process. Then you have more IB benefits here. You can go through it at your own time. Then also here you have why become an introducing broker with IronFX. So we have awards, IB on IB portal, and support. You will also have marketing materials. And then here you have trading benefits for your IronFX referrals. So for example, right here you have market products, trading platforms, security, transparency, exclusive bonuses, promotions, and more. You can always contact us and be able to assist you throughout the process. Then I want us guys to move on to affiliates. So on affiliates, just give it a second to load. So what is affiliation? Affiliation is a third-party marketing in more simple words. So you as an affiliate, you need to have an online presence. So you need to have a website or strong social media, or have, let's say, an academy of yours, and etc., etc. So you as an affiliate, you can earn commissions from your referred traffic to us. You see, this is a different website. It's a website dedicated to affiliation. You see here how it works, payouts, affiliate marketing. You have market analysis, SEO strategy, marketing tools, you have support. Also here you have academy, blog, and about IronFX. If you scroll down, you can see here how it works as well. Why partner with us, and etc. and etc. It's super simple for you to sign up as an affiliate. It's exactly the same process of signing up as a client. As I said, if you have any questions, you can always contact our support team and we will help you through the process. Then I want us to go back to our last option, which is white labels. So I will explain it in simple words for you guys that you don't have any experience. So white label is basically an arrangement to market and sell an already existing broker's platform as if it was your own. So if you're looking to jump into the industry, you can do that without having to start from scratch. So here we have reasons to white label, more reasons to white label. And then we have why choose the IronFX white label solution. You can benefit from robust and highly competitive trading environment based on deep institutional liquidity that will allow you to provide your clients with spreads and swaps starting from 0.0 pips and up to 1 to 1,000 leverage on over 200 tradable CFD instruments from 6 asset classes. So you have features here. You have trading account types, trading platforms, multiple accounts, customer service, leading authority, and trusted broker. So as I said, for you guys that you do want to start, you do want to jump into the industry and create your own brokerage, this will be a very, very nice way of doing that for you, because it's very important that you don't have to start from scratch. I understand it's very, very difficult to start a company brokerage. It's not like opening a store, for example, for clothes. It's different. So we will be able to assist you with that. We will help you into creating the best possible version of your vision when it comes to that. So that's it for today, guys. When it comes to our partnership programs, as I said, we as a company, we would love to have our clients as our partners. It is very important for a company to invest to their clients and to be able to build good business relationships with them. And if you go through our partnership programs, even if you don't have experience, if you have experience, that's great. You will be able to understand more about it. As I said before as well, you can always contact us by our support team. You can email them or just click over here and chat with them. So that's it for today, guys. Thank you so much for joining me once again, and can't wait to see you. Until then, be safe and have a very, very good day. Bye-bye.
Our live session has come to the end. Thanks for watching. Catch the next one tomorrow at 12 p.m. Enjoy your day.